lift, and performances for some of those sorts of companies haven't been that good. And, as expected, Peloton's numbers show that this company is obviously not profitable,
right?
But their revenue is growing very fast. So their total revenue growth in the past couple of years was up 99% and 100%, 110% year on year. Their net losses, though, were last year $195.6 million.
And as you say, that's up from just $48 million in losses the year before. So losses are growing. And interestingly enough, in this statement, they say we expect to incur operating losses in the future and may not achieve or maintain profitability in the future. As you look at Peloton and some of the other deals you've covered, what is concerning? The fact that they're literally saying we may not be profitable?
They're all saying that, right? So investors have to figure out whether that is worth sort of buying into it anyway, because these are high growth companies. So they're choosing not to be profitable for now. However, they're pulling in the revenues, and, once they get to a certain level, they can probably, start to make some profits. But as you say, it's really concerning when a company says, hey, please buy our shares, but we may never be profitable. And they're saying they're not obviously going to be giving a dividend either.
Our Bloomberg News deals reporter, Nabila Ahmed. Well, Tencent Music is under investigation by China's antitrust authority. This, according to sources who say the probe could end exclusive licensing deals the company has been forging with some of the world's biggest record labels. So, how did Tencent Music become so dominant? We discussed it with Bloomberg News reporter Lucas Shaw.
I'd say the concern is moderate. On the one hand, it's never good to have regulators looking at you. Tencent's in a pretty dominant position across the online media landscape in China, and in particular in music, for all of its success with its WeChat app and in video gaming. Tencent's three music services account for anywhere from 55 to 75% of the streaming market in China. But this investigation, the outcome would likely result in them just not striking exclusive deals. See, the music market in China works totally differently from how it does in most parts of the world. Here, the big record labels, they license their music to Spotify, they license their music to Pandora, they license their music to Apple. A lot of those services don't operate in China, and instead what they do is they sell Tencent the exclusive rights, and then Tencent sub-licenses it to other companies, all of whom say Tencent's paying too much, passing along the charges to them, and basically making them all suffer for some bad deals that it made.
Lucas, what has Tencent said in response?
So, excuse me. So far, they've said very little. I think they're waiting to see how it plays out. This investigation started earlier this year, January, February. A lot of the people that we spoke with said that there was an outreach to kind of competitive services and their partners in March and April, and there may be some kind of outcome later this year. My guess is that Tencent is going to kind of try to keep a low profile until they figure out what this will mean for them in the long term.
Any idea what the record labels, the music labels who are involved in this as well, what is their impact?
They have a lot on the line here because China is a market that many years ago was kind of a non-factor for them. There's too much piracy, nobody paid for music. It has grown a lot in recent years. And for that to keep growing, they need deals with all these services, and they're going to have to renew their deals with Tencent or make deals with rivals sometime in the next 6 to 12 months.
How good is this for competitors? I'm taking a look at some of the lists. We have Alibaba, Baidu, ByteDance. How thrilled are they?
Companies like Baidu, Alibaba, and in particular NetEase, which a lot of people say is kind of the real challenger to Tencent in China, would be very happy if instead of having to sub-license from Tencent, which means that they might not get all the songs that they want at any given time, they could just make direct deals with record labels. When I was based in Hong Kong for a few months late last year, and the executives at NetEase were very clear that they hated the exclusive structure because it just gave Tencent an advantage. And most of those music companies that didn't go the exclusive route, not the big three, but kind of independent labels, they said that they tended to benefit when they made deals with everybody because they had more transparency in their data. The downside of the deals, of kind of exclusive deals with Tencent, is that Tencent really has a lot of control over what happens with that music in a country where Western music still only accounts for 10 or 15% of all listening.
And Lucas, remind us, how much does Tencent Music mean to Tencent Holdings?
You know, it's a big deal, but think about it as Tencent Music is at the moment like a $25 billion company, where Tencent, depending on where the market is anywhere from sort of a $300 billion to $500 billion. Areas like gaming and in particular the social app WeChat are still much bigger for Tencent. But music helps feed into that, because one of the things about WeChat is it's a super app where they want you to come in there and chat and watch video and watch music. And so Tencent has staked out a leading position in areas like streaming video and streaming music to make sure that people never leave WeChat. If it loses its dominance in those other media areas, then the strength of WeChat on its users is weaker.
That was Bloomberg's Lucas Shaw. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Tune in every day, 5 p.m. in New York, 2 p.m. in San Francisco. And we're live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.
She grew up in a booming Iran where women held high-profile positions, only to see her country overthrown while she was away studying at Oxford, watching from a distance what happens when political reform doesn't keep pace with economic growth. Afsaneh Beschloss studied to be an economist, believing she'd spend her life working to help emerging markets develop. But instead, she's gone back and forth between the private and public sectors, as a banker at J.P. Morgan, as treasurer of the World Bank, and as Carlyle's 12th partner founding its asset management business. Now she's created her own firm. The Rock Creek Group marries Beschloss' deep understanding of markets and investing with her passion for development, pursuing diversity and environmental reform not just because it's right, but to earn higher returns. On this edition of Bloomberg Big Decisions, Afsaneh Beschloss. Afsaneh Beschloss, welcome to Bloomberg Big Decisions. Great to have you here.
It's great to be here, David.
So you started out life in Iran under the Shah and really lived your early years there. What is left of that experience for you as you go through life?
Really, two or three really interesting things. One is I grew up in an Iran that was very, very fast growing. It was sort of post in the 70s, and when oil prices had gone up, unfortunately for the rest of the world, but Iran had plenty of resources, and everywhere you saw a crane. It's sort of the same experience China had much, much later. And secondly, the other thing that is interesting is at that time, there were lots of women who were ministers, women in parliament, women academics, doctors. So as I grew up in Iran as one of three daughters to my parents, anything was possible.
So you saw, as a young girl in Iran, really, women in leadership roles.
Absolutely, absolutely. And I went to the international school in Tehran, which also, given its name, made me be very comfortable with lots of diversity. So it wasn't just diversity of the people that I grew up with in Iran, but also people from all over the world with very different backgrounds and very different circumstances.
Your father was an academic.
Yes.
Did that, from an early stage, make you interested in studying?
I think the one thing that was the most important thing in our household was education. My father was in education. A lot of our family was in education. My mother thought that no one could take away your education. So as it turned out, she was right. If you have a revolution in your country, no one can take away your education. They can take everything else away.
Let's talk about the revolution, because I believe you'd gone to Oxford pursuing an education by then, by
Yes.
the time the Shah fell.
Yes.
What was it like to be away from your country when that turmoil was going on?
Two things. One is, it so happened when I was at Oxford, I was studying economics, but my college also had a Middle East center. So I was also learning a lot about the history and economics of the Middle East just on the side, outside of my classes, which was very interesting. So in a way, I was learning more about the region I had grown up in, very differently than what I had experienced growing up. The second thing is that when you are seeing your country that, wherever you come from, is on a very, very big growth trajectory, but maybe politically it's not moving towards a democratic system fast enough, how fast it can derail. There was no way any of us could have imagined how fast Iran got derailed and moved in a very, very different direction.
You studied economics, as you
Yes.
say, at Oxford, and you taught some at Oxford as well.
Yes.
But then you decided to become a banker. You went to
Yes.
J.P. Morgan. Did you always want to be a banker?
No, actually, having come from an education family, the idea was that I would go into that profession and maybe do some economic development if I got back to go to Iran. So I got two job offers. One was to go teach at Vassar. One was to go to J.P. Morgan. And I said, I know nothing about the world of finance, and studying economics at Oxford is very theoretical. So I'm going to go learn how actually the economics I've learned gets applied in the real world. So that's how I ended up at J.P. Morgan, which was one of the best things I could have done.
Your academic economics informed what you did as a banker. Did what you learned as a banker inform your view of economics as well? Did it change your view of economics?
Absolutely. Both when I was at J.P. Morgan and later on when I was on the World Bank's trading floor, it was really interesting because the economics that you learn at school, first of all, you end up learning using just a fraction of what you learned, like in every other subject. But more importantly, I realized that markets move in a very different way than what theoretical economics would have you think. And I think that was really, really useful, both at J.P. Morgan and later in trading.
You had a good experience at J.P. Morgan.
Yes, excellent.
And then you decided, as you just mentioned, to go to the World Bank.
Yes.
That's going very much from the private sector to very much the public sector. Was that a big transition? Why did you make it?
So, as I said, when I studied economics, the idea was that I would apply to economic development, helping countries that are less developed do better, starting with Iran. Obviously, we had the revolution, and that was not possible. So the World Bank was sort of, for me, the new home that I could go, where I could really experiment with that.
Is what you did at the World Bank in the early days similar to what you did, the subject matter, to what you did at J.P. Morgan? Did you stay within the same subject matter area?
Similar and different. When I was at J.P. Morgan, it so happened I had done a lot of work on energy. One of my professors at Oxford had started something called the Energy Institute, which brought all the CEOs of energy companies and the head of OPEC and the sort of big academics together to talk about things. So when I went to J.P. Morgan, they did get me to work on big energy companies, sort of, again, pre-M&A work.
It cannot be a coincidence that you came from childhood in a rapidly growing Iran driven by oil and energy. Then you studied oil and energy at Oxford. Then you worked on it at J.P. Morgan, and then you worked at World Bank. It seems to fit together.
It does, but as you said, I had not thought of it that way. I think it was just sort of a natural progression. And at the time when I joined the energy department at the World Bank, I joined as a young professional, which was a 25-person program that came into the bank quite competitively. And I ended up being where it was most dynamic. I think what was always appealing to me was where I could do something that was useful, but also where the circumstances were more exciting, and you could do more.
And then you went from treasurer of the World Bank, a very big job, back to the private sector, to Carlyle, in private equity. Was that because you missed sort of really getting involved in specific projects and specific investment decisions as opposed to trading and being more abstract?
Well, when I was at the bank, it was not just trading. We invested across everything. So we had about $100 billion that we invested, and that was in equities, bonds, private equity, venture. We were really early in venture. But what I realized is that working in an organization with 10,000 people and running a huge group was very different than doing something entrepreneurial. And I had always loved doing entrepreneurial work, starting something from scratch.
Who approached whom? Did you approach David Rubenstein, or did David Rubenstein approach you about going to Carlyle?
My version is David approached me.
Well, then we'll stick with that one.
Yes.
And what was his pitch? What did he ask you?
I think David was building, at that time, one of the largest, most sophisticated, more global firms in private equity, and he wanted the firm to have broader investment areas in addition to private equity and venture, which he and his team had started. So he asked me to become the 12th partner, I think the 12th or 13th partner, something like that, so that I could start Carlyle Asset Management to invest in other areas outside of private equity and venture.
How did you square that experience with the mission that you'd sought at the World Bank? It's a very different organization.
So that was my hardest adjustment, going from the public sector after 20 years of working in the public sector to the private sector. The job was exciting. I was learning a lot. Hopefully I was contributing a lot. But that mission orientation is the hardest part. I think if I think about that, that has always been sort of the conflict for me in my different jobs. I think the interesting thing at Carlyle was that while Carlyle was doing private equity mainly as its main line of business, it had a very good culture, it had a very ethical culture, and it had a really good way of creating new companies, which was different than some other private equity companies.
Could you participate in projects at Carlyle that you felt were really making a difference for the good?
Being able to help the pension funds and the endowments to have higher returns through finding good alternatives to invest was great. So that part of it was mission-oriented, because if you could invest with a higher return in good projects for pension funds and university endowments, and their returns would allow them to pay their pensions or build all the buildings they needed or educate the students, that part of it was incredibly satisfying.
What about diversity? Having women on boards, having women in senior corporate positions, having people of color in those positions.
What we're finding is, in fact, in emerging markets, you're finding a lot of women going into, particularly in Asia, into these areas, much more than in the US.
Rock Creek.
Yes.
How would you describe the mission of Rock Creek today?
So at Rock Creek, we invest using innovation and technology and data in emerging markets and in what we call multi-asset class portfolios to generate the highest returns. We invest in hedge funds, we invest in private equity, in venture, early seed, and as well as in equities and bonds. And we have our own funds, and we invest in external funds as well. What is very interesting at Rock Creek is from day one, we created a database, and this is one of the things I learned in my previous jobs, is often a lot of information walks out with people when they leave. So at Rock Creek, everything that we do is in our technology, and that's the way we started the company. And that's something that we did from day one.
You particularly focus on emerging markets.
We do a lot in emerging markets.
Emerging markets, maybe more than other markets, are really susceptible to geopolitical forces.
Absolutely.
How do you factor that into your investment decisions?
So there's geopolitics today everywhere, no matter where you're investing. Emerging markets, obviously, volatility has been higher, more change in terms of politics and economic systems. So it is something that you have to incorporate. So when you're doing your risk management, not only are you looking at market risk and other kinds of risks, but you have to add the geopolitical risk as an important dimension. Obviously, having worked at the World Bank, it's something that many of us who are at Rock Creek have a lot of experience looking at that and turning that into a way that you can measure. We also are very fortunate we have great advisors in our advisory board who also have been long-term investors, but also thinkers in the broader finance world. And they are extremely helpful with us. Last but not least, we work with local groups inside the emerging markets. We find the best teams to work together. And no matter what kind of intelligence and experience we have in our team, it never competes with somebody who's sitting on the ground. And we find that when we put this together, it's quite powerful.
You've said that the role of data is very important in your company. You also have had a mission through your career to also sort of serve a greater good. How does that factor in, if at all, into Rock Creek?
This data has become a monster at Rock Creek. So we have data on a lot of investment opportunities. And I think two of the things that we do at Rock Creek are particularly interesting. One is a data on impactful and ESG type investments. We have a long history of investing in those areas, but also a very large database. Second is information on diverse firms. Rock Creek obviously itself has a lot of diversity, and some say it's the largest woman-founded investment firm, but if you go to the whole investment world and in finance, diversity is not one of its strong points. We happen to have also a large database of investable, diverse opportunities. And we have ourselves invested in, since our inception, over $4 billion in firms that were started by diverse individuals, founders, or managed by them, and women.
Yeah, I learned in business a long time ago, if you can't measure it, you can't manage it.
Yes.
So are you measuring diversity for your investments? How do you do that?
So in two ways. One is very simple. You know, are there, let's say, women working in the firm or having major ownership? Are they among the highest paid individuals? Similarly, with diverse populations of African American, Hispanic, and other diverse populations, we do the same thing.
So whether it's ESG, environmental social governance, on the one hand, or diversity on the other, are you doing this to get the best return, or are you doing this to do good in the world?
Absolutely, for better returns. I think one thing I'm excited, it so happens today, doing good actually will get you the best returns. The reason for that is that if we're investing today, we have to look at long-term value creation. So a company that has good governance, a company that is gender diverse, a company that is got good risk management and is not investing in areas that are going out of fashion, out of where the millennials will not be buying their goods, is not a good company to invest in, and vice versa. So you're looking for companies that are the best, and that's what we're doing.
What about diversity? Having women on boards, having women in senior corporate positions, having people of color in those positions.
Yes.
Again, we hear that companies tend to do better as they become more diverse, and yet they don't. What's wrong there? Why don't they want to make the more money by having a more diverse board, a more diverse C-suite?
I think everyone is comfortable with what they are used to. I think you asked me why, my experience was different. I was growing up in a place that was changing very fast. So change was my normal. If you're used to growing up in one way and running a company in one way, it's very hard to make changes. And what we're finding is, in fact, in emerging markets where things are not formed yet, where the banking system is getting formed, where boards are new concepts, where there are not a lot of men in private equity or in venture, you're finding a lot of women going into, particularly in Asia, into these areas, much more than in the US, where the relationships are very established and much harder to break.
How does the rise of China, and for that matter, what appears now to be a chronic trade dispute between the United States and China, how does it affect your investment decisions?
China was so smart to take advantage of all the trade laws that were written.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Bill and I always look for any philanthropy we do to fill some of those gaps.
I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech.
I think Facebook's how we won in a lot of ways.
Do you ever take any of the tips and give them to your LA Clippers coach?
No!
I will stand up for Canadian interests. I will only sign a deal that is good for Canada.
Coming up on Bloomberg Best, the stories that shape the week in business around the world.
Welcome to Bloomberg Big Decision. Really good to have you here.
Thank you so much for having me today. We know this business inside and out.
You've really built a conglomerate.
We saw amazing opportunities in the Middle East.
They have the dream. You have to bring it to reality.
Between the three of us, we can really do anything.
I feel like this is where we should go.
The investment climate has changed quite a bit during your career. And just take the last 10 years or so. One of the big changes after the great financial crisis was the huge infusion of capital from the central banks. Has that injected governments, at least through their central banks, much more in the private market than has ever been seen before?
Absolutely. That was historically unprecedented, the amount of capital that the governments all over the world injected into the financial system. What also it created is not only that unprecedented experience, but now we're at a place where a quarter point up or down is making huge psychological impact on markets. A lot of the investment and finance new generation that has been in this world for the last 10 years has been living in a zero interest, in Europe negative interest, in Japan negative interest, in the US very low interest rates. And so all of a sudden interest rates going up from 2 to 2.25 or something in that region becomes very shocking or impactful. So we have created a situation that in some ways is safer, but in some ways could create more volatility.
Well, more volatility, but could it also create more bad decisions?
Absolutely.
There was a discipline of the cost of capital in a business 10 years ago, 20 years ago, that I'm not sure is there anymore.
No, because capital is now very available. And now we're seeing, and the danger also is that, for example, in venture, where a lot of, seeding new companies, that is one of our biggest strengths in the US, where we are very innovative, where we create new companies and get them to grow very fast. That's a good thing. And having capital available to do that is wonderful too. The issue that is going on today is that because so much capital is going on, whether it is in the US or in Asia, the danger there is that a lot of companies that have no profitability but will not also be profitable in 10 years, and especially if we have a downturn from here, will really get hurt or not exist, are getting funding today. So that is very dangerous.
With the central banks, the Fed, the ECB, Bank of England, Bank of Japan, so much involved with the marketplace these days, is it inevitable that they will become more political?
They have become incredibly powerful, as you said. And what is really interesting is that Federal Reserve or the Bank of England or the ECB traditionally were often run by economists or people with very, very strong economic strength. Today, as we're looking at the new leadership, let's say at ECB, fabulous decision. At the same time, we're getting leaders here in the US at the Federal Reserve and leaders in Europe who are not just coming from economics, but they have had political experience in their various jobs. So they're more attuned to the interactions between politics and economics. Big question is how attuned. The worrisome thing also is all the other countries that followed our system to make their central banks independent of the political process are now looking at us. And you're seeing in Turkey, in India, in China, where the reason their economy grows so much was that they sort of let the economy be free of their politics. And now politics is entering more and more into not just the decision making on interest rates, which we saw this week, but also more the broader economy. And I think those are not good decisions.
How does the rise of China, and for that matter, what appears now to be a chronic trade dispute between the United States and China, how does it affect your investment decisions? Does it?
It does. It's almost one of the most important things that we look at. When I taught international trade, it was a theory of comparative trade. And what has happened is basically China was so smart to take advantage of all the trade laws that were written and WTO once it joined the WTO, not just to grow in an unprecedented way, but also to take advantage of it to create an industrial complex that killed the industry in many other countries. Smaller countries, so it's not just, I think the trade issue that President Trump has referred to and is one unifying subject, I think, in the rest of the world is a fact, in the sense that China wants to run the world trade in its way. So that is not something that can go on. Because it's not just the US or Germany or the rest of Europe that is not comfortable, but every small emerging market country that has had its industry or its areas that they had comparative advantage, if we still believe in that, decimated, needs to look at this. And so trade laws and trade rules will get redefined. And again, it's a question of time. So when we look at investment specifically, we have to look at Chinese growth. And one reason we look at China investments, looking at domestic industries that benefit from domestic growth in China, whether it's consumer or tech or education or health, which is one of their fastest growing areas, is because those are not going to get impacted. Doesn't matter how the trade disputes go on. That's where we invest in China.
Sunny Beschloss, thank you so much. Great to be with you.
Thank you, David.
is actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Hello, I'm Haslinda Amin. She's a leading light in what's become a faded opposition in the Philippines. Leni Robredo is the country's vice president. In the Philippines, an opposition leader can hold a post via an election, but she's been rendered almost powerless by the country's strongman president, Rodrigo Duterte. Leni Robredo has been threatened with impeachment and faces sedition charges over her opposition to President Duterte's war on drugs. And her Liberal Party, famous for the names Aquino and Rojas, was decimated in this year's midterm elections. She's also been a big critic of Manila's relationship with Beijing over infrastructure payments and the future of the South China Sea. With the presidential election set for 2022, Leni Robredo opens up about her political ambitions, her suspicions, and what it's like working with Rodrigo Duterte. This is a conversation with the Vice President of the Philippines. Vice President Leni Robredo, thank you so much for joining us today.
And thank you for having me.
With the increasingly an escalating U.S.-China trade war, countries increasingly find themselves in position to choose between the two sides. How would you describe the relations between the Philippines and the U.S. right now?
I think the relations has changed over the years, especially in the last 3 years. With the new administration, foreign policy as far as dealing with the United States has really changed. There seems to be a perception that to be more friendly with China or with Asian neighbors would mean, decrease our friendship or our relations with the United States. And I don't believe in that. I don't believe that the Philippines should choose between the U.S. and China, in the sense that friendships with both countries would be beneficial to the Philippines. I understand why the new administration has chosen to be more friendly with China. What I don't understand is why there is no clear lines between, giving up our sovereignty, because we can maintain economic relations with them, but there should be a very clean and clear line as far as protecting our territories is concerned and preserving our sovereignty.
There's a sense out there that perhaps the Philippines is selling itself to China. Do you agree with that comment?
Yes. Yes, because of the way that our administration now is responding to threats to our territories and threats to our sovereignty. For many years now, China has been occupying many of the territories where we have staked our claim on. And in fact, many years ago, we filed a case before the UN Arbitral Tribunal. And we won overwhelmingly, and we felt like it was a big win for us, in the sense that we were hoping that the win, that the decision, we would be able to use that to rally nations behind us. Because there is a sense that we are too small and too powerless dealing with China. But even after we got the Arbitral Tribunal award already, government has not responded in the way that we were expecting it to. We felt like, the victory that we've had was relegated to the background. And the president has made a lot of statements which gives a sense that we are acquiescing to to what China wants. So if people feel like we are selling out, we would understand why they feel that way. The president has made a lot of statements which gives us a scare, in the sense that we might wake up one day and many of our territories are no longer ours.
China has been militarizing some of the islands, yet the Philippines has made concessions in the South China Sea. Do you think those concessions were made because of the need for Chinese investments, Chinese money in the Philippines, especially the $24 billion commitment?
You know, we can only speculate. We have been asking the president to be more transparent as far as the deals with China is concerned. You know, every negotiation, every contract should be based on mutual respect. We are both, there should be a recognition that we stand on the same footing. There has been an impression that the president considers China more powerful than us. And we do not subscribe to that, you know, to that presumption. There have been a lot of speculations. There have been a lot of speculations as to why this administration has decided on this shift. You know, there has been talks of verbal agreements with China, but this government has not been transparent with the details of those talks. The arrangements with regards to the ODAs, with the loans with China, the arrangements with regards to the infrastructure projects which have been awarded to China. While there is a list available online on these projects, the details are not really available. So we have been demanding government to do that.
What do you make of talks on the code of conduct in the South China Sea? Chinese Foreign Minister Wang Yi has said that talks are progressing well, yet President Duterte has said that China is delaying. What's the status of those negotiations?
You know, we have been waiting for that code of conduct. We have been waiting for many years. We all know that negotiations started even before the term of President Duterte. But I think we are more impatient now. We are more impatient now considering what's been happening and considering the fact that really there is a growing fear that we might sell out. Because as of now, we are all pushed to the wall as far as incursions, reported incursions are concerned, as far as threats of, you know, occupying our islands are concerned, as far as stories of Chinese fishing vessel lording it over our exclusive economic zone is concerned. We're all at a loss. And I think the code of conduct will be one big way of, you know, providing a platform where not just China, but many other neighboring countries with claims on the South China Sea is concerned. At least there would be a platform where, you know, everyone will be guided on how to proceed.
Do you hope for U.S. intervention?
I hope not. The fact that U.S. is there, the fact that many other countries are there, is a source of comfort. But it would be best if we are in a position to defend our rights ourselves. I have always pushed for a multilateral approach. Multilateral in the sense that we consider ourselves all on equal footing, not the Philippines depending on some other country to fight for our rights and our sovereignty. There has been talks of doing bilateral approaches. As far as dealing with China is concerned, I am not too hopeful with that because of the history. Because we have tried that track already for a long time. The decision of the arbitral tribunal would have been, a good rallying point. Would have been would have allowed other countries to be on our side or rally behind us. But I think we missed taking advantage of that.
What are your plans for 2022? Will you be seeking presidency?
I would not have run for the vice presidency if I thought that I was not ready for the presidency.
President Robredo, I'd like to touch on your political plans. What are your plans for 2022? Will you be seeking presidency?
You know, I have always said that my entry into the political field was an accident. I've always said that my running for a seat in the House of Representatives and my running for the vice presidency was really destiny. I have not planned for it. Had my husband not died in the plane crash, I would not have sought a political office. If you ask me now, I have no plans, but I'm leaving everything open. I do not want to say anymore that over my dead body. You know, when I was asked after my husband died if I would seek a political office now that he's not with us anymore, that was how I answered over my dead body. But I've eaten my words so many times already. We still have 3 years before the next presidential elections. A lot can still happen. If you look at the history of many of our elections, 1 year spells a lot of difference. I have always said that the presidency is destiny. There are so many politicians who have sought the presidency and have prepared for it for many years.
Do you think you're ready? Do you feel like you're ready?
You know, when I ran for the vice presidency, that was one of the prerequisites that I am ready to be president. Because the mandate of the Philippine vice president is to take over if anything happens to the president. So I would not have run for the vice presidency if I thought that I was not ready for the presidency.
You're one of the more vocal voices out there against President Duterte's war on drugs.
Yes.
And there is a sense that that could be a backlash. Are you concerned that you could be kicked out of office before 2022?
You know, the threat has always been there since day one. Since day one, the threat has been there. Right after we got elected into office, I tried to reach out to the then president-elect because I felt like the country would benefit if we would be able to work well together. But the signs have been there from the very start. The president requested for a separate inauguration. And historically, the president and the vice president has the same inauguration event, but the president requested for a separate one. I thought things were changing when the president asked me to be a member of the cabinet. But you know, even when I was a member of the cabinet, I tried very hard to be very professional, to work well with him as housing secretary. But you know, I could not help but be critical of policies which I think were not good for the country. And his stance on the drug war was one of them. As early as 2016, there were already a lot of extrajudicial killings, and I have been very vocal about them. All of a sudden, I was asked not to attend cabinet meetings anymore, and I did not have any recourse but to resign because I felt like the portfolio I was handling would suffer a great deal if I was not, you know, if I did not have good working relations with the president. So apparently he did not look kindly on how I was very vocal on these issues. There was threat that I would be impeached. I think in 2017, impeachment complaints were filed before the House of Representatives. There is a sedition case which has been filed against me. So threats are there, but while I feel like all the challenges are there, it's been I have trained myself not to be distracted by all the noise.
Vice President, you talk about the challenges. Is there a sense that there is active effort to replace you as the Vice President?
There is active effort to replace me. My opponent in the last elections has been claiming he's the rightful Vice President. There's a pending case, as I've said, there's a pending protest case before the Presidential Electoral Tribunal. There are a lot of people close to the President. There are a lot of people who are identified with the administration, who has made no qualms about saying that they would hope that I would be unseated, or they would hope that I'd be booted out of office. So if the question is are there groups who are actively seeking for my ouster? There are, but I think there's no proof that the president is behind these efforts.
There is a possibility of a Duterte dynasty because his daughter could be a presidential candidate.
President Duterte is president. His daughter is mayor. The son is vice mayor. So it would not at all be surprising for another Duterte to become president.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Bill and I always look for any philanthropy we do to fill some of those gaps.
I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech.
I think Facebook's how we won in a lot of ways.
Do you ever take any of the tips and give them to your LA Clippers coach?
No! I will stand up for Canadian interests. I will only sign a deal that is good for Canada.
Coming up on Bloomberg Best, the stories that shape the week in business around the world.
Welcome to Bloomberg Big Decision. Really good to have you here.
Thank you so much for having me today. We know this business inside and out.
You've really built a conglomerate.
We saw amazing opportunities in the Middle East.
They had the dream. You had to bring it to reality.
Between the three of us, we can really do anything.
I feel like this is where we should go.
President Duterte has made flippant comments on women. Do you think it's increasingly difficult for women to be in power under this administration?
You know, the signals are mixed. On one hand, you see the president delivering misogynistic remarks. I've been at the receiving end of some of those remarks. But on the other hand, you also see the president signing into law very important legislations that we think are beneficial to women. Just recently, he signed into law the Expanded Maternity Benefit Act. He's also signed into law Bawal Bastos Law, which really creates safe spaces for women. Although much of the effort has been on the side of our legislators, the fact that the president did not veto these laws and these bills and in fact sign them into laws really gives us a sense that behind those misogynistic remarks, he has allowed pieces of legislations like this to be passed.
3 more years to the term. How would you steer the opposition party? What needs calibrating in the lead up to 2022?
There is a lot that needs calibrating as far as the Liberal Party is concerned. You know, the sad thing about Philippine political parties is that whichever the political party of the sitting president is, almost everyone is there. The previous president was a member of our party. So most of the politicians were with our party when the president when it was still the time of President Aquino. When there was a change in leadership, there was a deluge of, political leaders transferring to the political party of President Duterte. And we lost a lot of members in the party, which I think would have looked like a defeat as far as our political influence is concerned. But I look at it as an opportunity to rebuild the party and to reassess where we are going.
How do you make sense of the president's popularity, which is in excess of 80% right now?
I think it's a combination of a lot of things. Mainly, people feel that he's very authentic. I go to the provinces often enough, and if you base what people say about him, the number one thing that they appreciate of this president is that he's authentic. And I think it's refreshing for people. It's not to say that we agree on many things that he does, but we have to realize and we have to understand why people like him. As far as the party is concerned, there is a lot of relearning and tweaking to do, and we have less than 3 years to do that. perhaps one of the things that we have to ask ourselves is, how are we responding to the needs of our people? And the president has been very effective as far as that is concerned, because people feel like, if you look at the approval and trust ratings of the president, it's really high, and it's past midterms already.
There is a possibility of a Duterte dynasty because his daughter could be a presidential candidate. What's your reaction to that, and what can prevent a Duterte dynasty?
It's difficult to say what can prevent, but it's actually a reflection of Philippine politics. It's not just that the Duterte family who are lording it over in the Philippines. President Duterte is president. His daughter is mayor. The son is vice mayor. The other son is a member of Congress. But in many other parts of the Philippines, that's what's happening. And the irony is that our Constitution is very specific in saying that we should not allow political dynasties to proliferate. But given that we have not passed an enabling law, Congress has not passed an enabling law to give heart and soul to that constitutional provision. So it would not at all be surprising for another Duterte to become president.
Vice President Robredo, just one final question. What should the priorities be for the government in the next 3 years?
Poverty is still the prevailing problem across the entire country. If you look at our numbers, our economic numbers, our economy has been growing, and it's been growing in a manner that we're better than many of our Asian neighbors. But it's not a growth that has been inclusive, because a sizable portion of our population is still poor. The gap between the rich and the poor is still very wide. There's a sense that growth has been seen as an end by many of our economic managers, when in fact it should just be a means to an end. We cannot claim growth to be really effective if many of our people are still poor. So for the next 3 years, it's what government should focus on. There should be a reassessment of how our policies are really affecting the Filipinos who are at the lower income bracket of society.
Vice President Leni Robredo, thank you so much for your time today.
Thank you.
It's been a pleasure.
No, thank you for having me. Thank you for having me.
In San Francisco, a lot of tech action today.
Our top stories this morning in D.C. and
the Dow and the S&P.
Shall we? So the euro on a 7-day
sizable moves in the currency market. Temperatures down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the First Word Asia.
The U.S. and Japan duke it out over exchange rate.
China's slumping onshore bond market is
You're watching the best of Bloomberg Daybreak Middle East. The major stories driving the headlines this week. The arguments for and against a cut. San Francisco's Mary Daly says the biggest worry is that policymakers get ahead of themselves. Iran says thanks but no thanks to President Trump. Why top Iranian officials are calling a meeting between Rouhani and Trump unimaginable. And the heat is on. Competition for foreign direct investment in the region ramps up. The CEO of Dubai FDI says Dubai is in prime position for a bumper year. San Francisco Fed President Mary Daly spoke exclusively to Bloomberg this week. We got her thoughts on the Fed's rate outlook and whether a tightening in December was a mistake. And then we spoke to Shane Oliver, Chief Economist and Head of Investment Strategy at AMP Capital Investors, for his take on Daly's comments.
We were below the neutral rate of interest, so we were stimulating the economy when we had those conditions. Subsequent to that increase, that rate hike, then what we saw was that the mood and the data were becoming more pessimistic, if you will, a little bit softer, the data a little softer, the mood a little more pessimistic. And that's partly because that strong headwind I was talking about, it intensified. It wasn't just a gust that went away. The whole wind got stronger. And that blew against us. And these types of things, global slowing, the headwinds from uncertainty, those things weigh on the economy. The neutral rate of interest has been coming down a little bit. And so to recalibrate policy, that's why I supported the July 25 basis point cut, to recalibrate policy, to put the economy back in a good position.
Back to where it was before the stance on monetary policy. But tell me something as well, Mary, here. And this is a question actually from my colleague David Ingles, and that is, if the ECB recalibrates and decides to re-enter quantitative easing, what do you take away from that, and what's your reaction to it?
So all central banks are responding to the fact that they've got economic conditions that are changing. So in Europe, in the European Union, the economic conditions have slowed quite a bit, and inflation's under the target. And so that requires central banks to take action, and they're doing that. In the United States, we also look at our economy. We see how the global factors affect us, and we have to take our interest rate decisions based on what we see for the domestic economy.
Mary, there's a sense out there that central banks are being held hostage by the markets. The more central banks do, the more the markets want. Is this the new normal? Are you comfortable with how it's panning out?
Well, markets are moved day to day. They fluctuate. They're finding their own footing. And some of that is based on the outlook that they have for the economy. And some of it's based on just trying to figure out what's coming next from central banks. And what I do is I take market information, financial conditions more generally, as an input. Financial conditions being tighter or softer or easier would influence how stimulative the economy is, how well supported growth is. So I take that as an input, but it's not a determining factor in my decision making.
At the very latest there, in an exclusive conversation with the San Francisco Fed President Mary Daly. Let's get straight to Sydney, bring in Shane Oliver, Chief Economist and Head of Investment Strategy at AMP Capital. Shane, listening to Mary Daly, she talks about a recalibration of policy. I want to show our viewers and you this. This is the Fed. They have the highest risk-free rate in the developed market. So they control the highest interest rate anywhere in the developed world. So the question is this: Have bond traders gone crazy, or is the Fed hopelessly behind the curve when they use words like recalibrate? And maybe, Shane, should they be doing more than recalibrating?
I guess with the benefit of the information we now have, they should. But don't forget, the Fed got to that point when the US economy was a lot stronger, when the headwinds to US growth were a lot weaker, when unemployment was very, very low, as it still is, and when inflation was around their 2% target, whereas other countries weren't performing anywhere near as well. So I think the reality is the situation, as Mary Daly just told us, has changed dramatically since late last year, and that change has accelerated, if you like, in the last month, even since the last meeting. So I do think, yes, they need to get rates down, and the bond market is telling us that. Now, whether bond investors have gone crazy, that's a separate issue, but directionally, I think the bond market has got it right, that we are into an environment where there's more risk to growth, where there's deflationary pressures, where central banks will have to ease, where there's going to be more quantitative easing, and therefore it's appropriate that bond yields have fallen.
The most recent, I suppose, push and pull that we've seen on the curve, Shane, is Mnuchin talking about the possibility of a 100-year paper. Up the 30 yield goes, and the slight steepening they had, versus Navarro, who tempers our trade optimism, and we return to form, don't we, which is flatteners are us. Was Mnuchin's kite flying an attempt to re-steepen the curve, or is that just a stretch too far?
You never know with the US administration at present. I must admit I'm a little bit with you that maybe it was an attempt to re-steepen the curve. And I also kind of think that there is some logic to issuing a 100-year bond because interest rates are so low. I mean, that logic is impeccable when it comes to, say, Japan or Germany, where interest rates are even negative. You can borrow for 100 years at negative rate. I mean, that makes good sense. But maybe the timing of it after the latest flattening or inversion of parts of the US yield curve did owe to some desire to get bond yields up again. But anyway, as you say, it was very short-lived. The trade issue remains the current reality.
Would you buy a 100-year paper in the States?
No, definitely not. In some ways, this is a bit like the early 1980s. The bond yields have gone higher and higher and higher. We know that at some point it's going to be unsustainable, but it's very hard to predict when it will go the other way. And that, I think, is the situation today, that given what we're seeing around the world, easier and easier monetary policy, a return to quantitative easing, increasing talk of modern monetary theory, perhaps being used to finance government spending, all of those things suggest that at some point the risk will shift the other way and inflation will pick up. Populism normally goes hand in hand with inflation. We're seeing more and more populist leaders around the world, Donald Trump, Boris Johnson, whoever, and